one of us is unique, so just recognize it and live your dream. We all look alike, but we're different breeds. See, authenticity is the key. The key to peace and a happy life, and many more things, yeah, that is right. I would never tell you a bad advice. Wrote this cause it's what I had to write. Cause everything happens for a reason. The rain, the wind, and the four seasons. And once I noticed this fact, everything made sense, life became more decent.
Welcome to the Dealmaker Zone. My name is Steve Stone and I'm your host. Our guest tonight is Klein. He's the principal at Thor Equity Residential Division. Alan, welcome to the Dealmaker Zone.
Yeah, thank you so much for having me. I appreciate it, Steve.
So tell us a little bit about your background.
So, it's a long story. I'm going to try to make it somewhat short. But
Okay.
basically, I started off my career as an investment banker at JP Morgan, their real estate division. And I was an analyst, just like any other 21-year-old New York kid, doing that thing. And I learned really quickly that this was a business I didn't want to stay into. And I was learning a lot about corporate finance, and I would have a managing director that would, say, what would Starwood look like if it owned Hilton? And I would look at him and I would say, it would look like a big deal. And he would say, why don't you financial model the transaction? Let me know on Monday. And so as I did that for 2.5 years, I got great experience and great contacts, but I was learning very, very little about the business. When I was about 22, 23 years old, I started to look to buy my own apartment. So I saved up all my bonus money, and I said, you know what, I want to buy my own real estate apartment in Manhattan.
Did you end up buying the apartment?
I did.
Okay.
And
cool.
I went on a search, and I made a spreadsheet of, all the comps and what my budget was, and if it was a one bedroom, and the condition, and the location, and et cetera. And I started falling in love with the New York City residential market, the real real estate market. So I bought this apartment on 72nd between 1st and 2nd. I actually closed on the day before 9/11. I closed at 9/10, and I said to myself, "What did I just do?" I mean, in terms of obviously the horrific tragedy for myself personally, I was like, as an investment, this is not I'm not doing well on this.
Yeah.
And then I realized that I was falling in love with the New York City real estate market, and I wanted to get away from the corporate finance investment banking world. So I then met two guys who were principals of Stonehenge Partners, who was a 4 or 5 building company at the time I went, and I was there for 12 years. I was the head of acquisitions, and we did about 60, 70 deals worth $3 or $4 billion of real estate. And my love of buying that one single apartment
led you to want to...
Exactly right.
That's very fascinating. So from then, a couple of years ago, you left to join Joseph at Thor Equities to kind of set up their residential division, because they didn't have a residential division. Can you talk to us a little bit about that transition and how that came about?
Yeah, amazing move for my partner, John Fishman, and I, because we were be able to be principals in a new business. And Joe, who is obviously one of the most successful retail commercial guys in New York, when he was buying real estate, he was inheriting residential on top, and that wasn't, necessarily
part of his core business.
Exactly,
right.
part of his core business. And John and I, trying to start our own business, we're able to leverage off of his infrastructure, his team, his office space, somewhere to sit every day. And Joe has been an unbelievable partner. He's a true genius. And he literally let us do our own thing, and it's been supportive of every aspect along the way. So, call it 2-3 years, that's 2.5 years now into the business, we've bought over $1 billion of real estate. We own about 800 units. We have a 25-person team. And it's an unbelievable synergy, because when we buy residential that has retail down below,
you have a top operator to handle the retail component.
Right, we have Joe, and vice versa. And just so from an operational perspective and an intercompany perspective, it's been a really, really good fit so far.
So what can you tell us about working with Joe? What didn't you know about him that you've learned since you guys started working together?
I mean, Joe is just a true entrepreneur. I mean, and he is one of the smartest business guys in the entire world. If you put Joe in real estate, he's going to be successful. If you put him in retail, he's going to be successful. if you put him in Washington, D.C., he's going to be successful as a politician. The guy will just always figure it out and be a successful guy. And he's really just taught John and I a lot about how to really start a business, how to have really grounded principles in terms of how you ethically behave with your partners, your employees, et cetera, and then how you're able to grow a business. So he's really been an unbelievable mentor for us. And Joe is also smart enough to know that he allows us to do our own thing. And when it comes to the big decisions, we always have him, to help us make it, because he's been there before.
Definitely.
So it's been a great run so far, and we're excited about what lies ahead.
Awesome. So talk to me about the business. You have a lot of investments in New York. You have a couple overseas, right?
Well, Thor in general is a $15 billion company worldwide. My business with John and Joe, called Thor Residential, is a Manhattan-focused business, although we're starting to look at Brooklyn as well right now, and we're very close to acquiring 2 or 3 properties that are pretty significant. So we're, I would say, a New York City residential, rental apartment business company. Is
there part of the city you prefer in terms of opportunities?
It's a great question. When we first started the business and we were trying to figure out what we wanted to do, John, Joe, and I made a conscious decision that we thought there was a shortage of housing for families who live in New York.
Which is very true, by the way.
And I'm the living example. So I have 3 girls on the age of 5, as we were joking around before.
And I have 2. One's turning 5 in a few weeks. And
John has 2 young kids as well. And we both live on the Upper East Side. And what we've noticed is that a lot of the public schools have been closing down in some of the suburbs. And the reason being is that it's really 3 reasons. One is that technology has really made a huge change in terms of the employment world, right? So people now are not forced to come into the office at 9 o'clock, sit there for 8 hours, take an hour for lunch, and go home. I mean, that American dream of, buying a house with a white picket fence is really just not there anymore.
No.
And as you can see. And the second is that New York City itself, we had 2 unbelievable mayors before de Blasio in Bloomberg and Giuliani, and they really cleaned up the city. So, let's just say in 2012, New York City went down 13% in crime. I think the last 2 years it's continually decreased as well. So you're talking about having one of the safest cities in the world.
Safest big cities,
and a very efficient city. So now people like me who are a little afraid of raising young kids in a big city like New York, that whole concept of being an unsafe city is out the window. And then you just have the fact that people evaluate the commuting time, right? So, for my wife and I who both work, it's, if we were living in the suburbs, it's an hour there, an hour back, no matter where you are by the time you get home. And so people want to spend more and more time with their family. And then the last component, which I think is the biggest and people don't talk about it enough, is the fact that the public schools are, the best they've ever been in the last 20 years. So even on the Upper East Side, where you have PS6, which we all knew was a great school, for example, my daughters who went to private preschool, for $25,000, $30,000 a year, I'm now sending my 5-year-old daughter to kindergarten at PS 267, and she is loving it. She has 2 teachers in her class. There's 18 kids in the class. It's not overcrowded. All of her friends from her private preschool are there. And so, before, the whole notion that if you were staying in New York, you had to go to a private school, which is $40,000 a year.
It's like going to college.
Right, and you got times 3 kids, it's $120,000 a year, which means you need to make $240,000 is now, just to send your kids to school, is out the window. And so what we saw was that we had a huge demand of families who wanted to stay and a shortage of housing to fit that demand. So to answer your question in a long roundabout way is that we focused on the Upper West Side and we bought a lot of buildings on the Upper West Side, like the corner of 84th and Riverside Drive, where we bought buildings that were built for large apartments that were split up over the years. We're bringing those buildings back to their architectural configuration, and now we've got these 3 or 4 bedroom apartments to fit the demand of people who want to stay in the city, and we're basically charging whatever rent we want.
And so my follow-up question to that is, yes, you do make a good point in terms of families want to stay in the city. There's low crime. There's great transportation, right? Especially if you have apartment buildings next to the subway. But one of the issues ties into rent, right? So your company, you mostly focus on luxury apartments, right? It's not affordable housing, right?
Well, we buy buildings from owners that have rent stabilized and rent regulated apartments.
Okay.
That's our focus. Just because any buildings built in the pre-1970, that's what it is.
Yeah, it'll be rent stable.
And what we do is through just our business plan of natural attrition or whatever, is we take those apartments and we try to combine them and to make them into larger spaces, given obviously doing everything with the laws of New York City, and we create these larger homes for that demand.
Got it. And looking at the portfolio, it seems you've also made a couple of buys in Harlem, right? On 125th Street and Morningside. So some people view the Harlem market as maybe overpriced. You don't seem to think that way. So what do you know that your competitors don't know about that part of the city?
I think that I don't like to give all the secrets out, but listen, there's a couple obviously well-known factors that you just can't predict on. And the first is Columbia University, an institution that's been around for over 200 years. And when they decided and have already started to break ground on building a $7 billion campus over 17 acres to the west, and we're buying a building that's across the street from that, and it's the only building that exists, we're feeling pretty good about that purchase. So that's a huge driver. And then when you see just with all the other new developments that are going on, and we're not the only people coming to the party. You also,
you're not. But I just noticed that. I
mean, it's a great observation, and we've tried to been under the curve a little bit. But you have, for example, Bed Bath & Beyond and WeWork. We just bought a building, 17 West 125th Street, that's literally connected to Bed Bath & Beyond and WeWork. I mean, then on that corner you have Whole Foods. I was walking around with a few of my investors the other day, and I saw a Serafina. I literally was in shock. I mean,
by the way, I live in Harlem.
Okay, so if you would have told me that a Serafina would have been in Harlem 2-3 years ago, I would have. These are Madison Avenue type restaurants. There was an article in the Wall Street Journal, which I'll send to you, outside of this little talk we're having, and it talked about Harlem being the new meatpacking of the Upper West Side. So between Columbia to the west, all the new developers coming in, all the new development, my view of that New Yorkers are going more and more north as you just have this population growth and expansion of incoming renters, which we'll get to in a minute. I just feel like versus your choices of going down to the financial district.
And the apartment size is usually bigger also on the Upper West Side and in Harlem.
Exactly. And then, if you think about just over the years, right, like 25, 30 years ago, people like 86th Street. I'm not going across 86th Street. Then 15 years ago was 96th Street. Now it's 125th Street. I mean, it literally is. So we just see a huge demand of renters want to come there. Columbia, to fit that $7 billion investment with their 17-acre campus for the business school and the science center, we already see the gentrification happening. We're trying to buy as much as we can, as quick as we can before the party's over.
It makes a lot of sense. And by the way, the one thing I noticed about Columbia in that environment is there's no luxury hotel. If I were in the hotel business, I'll definitely open something up there because all these people are going to come visit Columbia, come for graduation, etc. They also need a place to stay.
I agree.
So I read a recent article that mentioned that Equity Residential and UDR mentioned that their rental rates in the city was somewhat down compared to this time last year, and they've had to offer a lot of concessions. How has your business been going? Have you felt any softness in terms of your pricing?
No. So, Equity Residential and UDR, both, I know a lot of the guys there, and we're kind of in separate businesses in a way, in that they really, for a lot of different reasons, cannot buy the kind of real estate that we're buying. So for example, these buildings that we're buying that have a big rent regulated component that are only 20 or 30 million bucks, like it doesn't move their stock price enough for them to purchase. So I'm not necessarily competitors with them. Now what they are buying are these luxury high-rise buildings that were, you know, called core when they were built, and now they're core plus, and they need renovation. And so it's an absorption issue for them at the end of the day, right? If they're buying a building that's got 500 units like River Tower, which is a deal that just got sold by EQR, then they've got to lease, you know, call 40 apartments a month at these, you know, rental rates that are very tough. For me, when I'm buying a building in Harlem that's, you know, got 50 units and 35 are rent stabilized, and I only need to manage 15 units of inventory, and they haven't been renovated, it's what we want to set the rent to be. It's not what, for example, EQR has to do in their business, which is lease, because they get vacancy. So it's a completely different business model.
Got it. So from your standpoint, from here, the second half of the year, you don't really anticipate any major changes in terms of how you're pricing your units, et cetera?
No, in fact, we've seen increases all over the place. In our building on Riverside Drive, we just signed a 3-bedroom lease for $19,000 a month, which is $110 a foot.
Wow.
Because we created a unit, rental finishes, but we created a unit that just doesn't exist. If you want to live in a high-end rental on Riverside Drive in the 80s, near transportation, there's only one place to go, and that's Thor Equities Residential on 84th and Riverside Drive.
Got it. Do you have any condos as part of your portfolio? It's
a great question. Right now, our business model has always been to buy buildings that work as rentals. Obviously, the highest and best use is a condominium, but I am about 1 day away from signing a very, very large deal to buy some unsold share condominium units.
So what's your view on the condo market, though? Because, again, I read another article that mentioned that there are a lot of high-end condos, the super pricey ones, right, where some of the developers are changing their mind. Maybe they hadn't converted the building yet. They'll keep it as office or hotels. There's been some softness with the condo sales. What's your view?
100%. Yeah, I agree with that 1,000%. The super high-end condo market, so the 57th Street, you know, tower, you know, that Excel bought, and 432 Park that Maclo built, and on those, you know, how many, you know, $50 million apartments can you really sell? And so with everything that's going on in the world, you know, from a global macroeconomic perspective, and how many of these buyers are for real, the condo market is definitely softening on a super luxury level. Our business is the complete opposite, right? We're buying rent-regulated, affordable housing, rentals in Harlem, and then maybe one day in the future we'll convert them or we'll sell them to a converter. But even if I'm buying, you know, call it a bulk sale of units, it's still going to be at, you know, call it 20 cents on the dollar. So if the dollar goes to 80 cents, I'm still 40% below market or 400% below market, and so that part of the business really doesn't affect us at all.
Got it. And in terms of your investment strategy as a company, do you bring in any outside capital, and is most of your outside capital international or is it local?
It's a great question. I mean, literally, when you are a $15 billion company like Thor is, you need to be very, very flexible and nimble. So to answer the first part of your question, we, meaning the principals of Thor, are invested in every single deal. And we also, and that range is, you know, it's all over the map depending on the deal and what our investors want. And we have local domestic institutions. We have foreign institutional partners. I think there's, you know, probably over 40 institutions that invest with Thor. And then on the private side, we have international investors and local U.S. domestic investors. So we cover, you know, the map, and I spend a lot of my time, you know, traveling and speaking to them and talking to them about their investments.
Speaking of traveling, what's their view on the current political landscape? We're in an election year. Any thoughts, views on investing in the U.S.? Are still comfortable with investing, or what are their?
Yeah, I mean,
what's the sentiment?
That, you know, think about it. Just what's happening in each region of the world right now. As crazy as our race may seem with Donald Trump and Hillary, you know, you have a lot more crazies happening. Whether it's the issues happening in Brazil and South America, the Middle East being the Middle East.
Yeah.
And so U.S. will always be considered a haven for investing. Real estate has always been one of the safer, asset classes. And then you also have in the real estate world, what is the safest investment in the real estate world? You've got office, retail, hotel, and residential. And what we've seen over the last, who knows how many years, is that residential has always proven to be the safest asset classes because people always need a place to live. And so the hotel market, I think, is oversaturated. I think I saw a stat that 50,000 new rooms are coming on board. And in fact, if you were to take your iPhone, and you should do this after our interview, is look at this website or app called Hotel Tonight.
I actually have the app.
So look at it tonight, and you will find between 5 to 10 nice rooms under $150. And to show you that, I mean, that's a pretty remarkable stat.
That's true. And plus, you also have Airbnb that kind of cuts into hotel revenues, right?
Right, but the Airbnb thing, is something that I'm not a big fan of.
I wouldn't think you were, because you own a lot of apartments. You don't want people.
First of all, it's illegal.
It is illegal in New York,
yes. And two, I've heard some people have had really bad experiences with it.
That's true. I mean, some people have had some positive, some negative, but I totally understand. Speaking of which, I'm also in the tech space, and I have a lot of friends who have tech startups, and their main focus is kind of working with real estate developers and investors, right? So as an owner-operator, what sort of software, have you seen any software out there that can help you grow your business, or is there any, or do you not really focused on
No,
software?
for sure. I mean, so like I mentioned, John Fishman is my partner who you know well.
Yeah, we used to work together at Stonehenge. Full disclosure, I forgot to mention, we used to work at Stonehenge together.
Right, so John and I grew up together, and I spent way too much time together the last 30 years. And so he runs the day-to-day operations of our business. And so he's been a huge catalyst in the real estate industry of using technology to improve the business, both for us as landlords and also for prospective tenants. And so we use this Salesforce program, which I think you've heard of,
Yes.
To manage our inventory. And John, I wish he was here with me, he can better explain exactly how it works. But bottom line is that we know exactly, from our dashboard on our iPad, how many units we have vacant, which units are under renovation, when tenants like to go to the apartments, where the tenants are coming from, where do these tenants work, how much money do they make. The statistics and data that we get is insane, and it not only helps us manage our portfolio. For me, though, on the acquisition and capital side, it literally dictates some of our business decisions in terms of what buildings should we buy and how should we underwrite the rental stream for those units. So to answer your question is yes, Salesforce is one. I'm sure he uses a few other things too. But that is the main one that we've been using so far.
Definitely. So the way you explain it, as your business grows, technology is definitely a huge component of your business. So,
yes. And we're also, I'm sorry to interrupt you, but we're also able to sign leases. The tenants will let us sign leases online electronically, which is pretty awesome.
No, it is. It is. It's huge on a time-saving component. Definitely. So we're almost out of time. Any final thoughts?
No, I mean, listen, I think we're in an interesting time right now in general. The market in New York City has obviously been insanely priced over the last few years. We've had a great run. I think we're in this little bit of time of limbo where people are not sure whether is the party over, is there a bubble, etc. I do think that, though, a lot of the regulations that have been, brought down by the local government has scared some people, but I think that's created a lot of opportunity for us. So when there have been bids for deals with the rent-regulated apartments, some of the people have been a little nervous because they don't understand the laws and how to.
And they don't understand how they're going to be able to make a profit.
Exactly.
But you see it, but that's your opportunity right there.
Our competition is going away, and we're buying this great real estate at very, very low basis. And as long as you do things, by the book, smartly with the right capital and with the right people, I always think there's a great opportunity in New York City. I think that's been one of the things that have been proven true for the last 100, 200 years.
Definitely. Thank you so much for being a guest, Alan.
I appreciate it. Thank you for having me. I feel honored. Thank you so much.
Absolutely. That's our show today. If you want to learn more about the show or be on the show, you can send us an email at show@AnySizeDeals.com, and that's the last word.
No matter how you choose to live, be yourself. Cause your authenticity is a gift, so be appreciated.
Gotta be yourself. Be authentic and you see that you be free as well. Gotta be yourself. Gotta be yourself. Be authentic and you see that you be free as well.
Are you really go find it out? Your heart will tell you what life's about. Don't believe what your mind will shout. I'm optimistic, no time for doubt. I focus on the good things in life, so I'm attracting the things I like. You can learn from everything I write, but do whatever you think is right. You